Hello friends, welcome to my channel. So a very important news from a very important person. So Jamie Dimon, long-time JP Morgan Chase CEO, said that the banking crisis is not over and will cause repercussions for the years to come. Now, this may be for the long term, but as we all know, market will discount everything in a much faster way, and it's not about how much time it's going to take. The problem is there are some lapses because of which we have seen how small banks are disappearing from the economy, and this is not at all a good sign. Okay, if you think that the banks will get bigger and they have more stability, that's fine, but everything is important if you are looking at the business ecosystem. Likewise, in our natural environment, so the natural ecosystem, everything matters a lot, from small to medium to the large one. So this is not at all good. And there are lots of things which he has wrote. Let me read some of the most important one. The recent banking crisis in the US began with the collapse of Silicon Valley Bank, which was closed by regulators on March 10th as depositors pulled tens of billions of dollars from the bank. The smaller Signature Bank was closed 2 days later, and in Europe, a Swiss regulator brokered a purchase of Credit Suisse by UBS. JP Morgan and other large banks stepped in to make $30 billion of deposit at First Republic, another regional lender that investors feared could become the next SVB. So, this is just a crack. Okay, you may hide it, but it's not going to disappear. That's the most important thing. So without going much into detail, let me take you to some banking index, or banking US banking index rather, and how they are performing. So let me check the banking index. When we have it, Dow Jones, Dow Jones Bank Index, and let me show it to you, DJI Bank. So okay, I think I have to Dow Jones, yeah, Dow Jones. So let me check, yeah, Dow Jones Bank. So this is what we have as far as this. So this is the monthly chart. Now if I may look at the monthly chart, so this is the monthly chart. You can clearly see that even though he was talking about a big downside in the upcoming years, or the trend is for the next couple of years, but when you are looking at the price chart, it is saying something else, because the correction has been going on. And now the big support for Dow Jones Bank Index is 335, and once it started trading below, or if it started trading below 335, a big problem will open up, because then the next big support levels will be, here we are, 261, and even here we are 138. So this is not at all a good indication. Let me be very clear, because price will give you a much better indication compared to the news and fundamentals. Because fundamentals, let's say if you are talking about fundamentals, it will get updated after each and every quarter, so it means there is a lag of 3 months. But when you are talking about price, stock market will discount each and everything in a much faster manner. And if you are looking at Dow Jones Bank Index, this is just a simple example. You can clearly see the resistance has already been hit, and now it has already started moving lower. So one cannot rule out a 50% correction. So if you are looking at the price move from the lower to upper end of the range, it is like 600% move. And if I go for a 50% correction, the least, so here we are, so 50% correction will be somewhere near 290. Okay, and if I go for 61 or 62 as for Fibonacci, then it will somewhere in between 200 and 220. So that's why I'm saying that a correction has just started, and this is not at all looking good as far as the Dow Jones Bank Index is concerned. So this is the end of the video. Thanks for watching.